All right. So last that we left off was we just entered in two invoices, right? One for Bob Mason, okay, and the second one was for Anderson Wedding, where they received a discount, and how you apply it on the invoice, right? You have to use an invoice, a discount item, we call it, okay, and then put it in there, and we will be able to subtract any discounts that you need to take out when you do have a sale, okay? Now let's go ahead and run that report on how many open invoices that we actually have. So again, two ways that you can do it, right? If you go ahead and use the income tracker, that's just going to give you an overview of what of all the people that owe you money, what those invoices entail, and when their due dates are. Now, this is just to go ahead and continue on if you did end up receiving a payment, or maybe you need to fix a bill on here. This isn't a report, but let's say a boss decides to ask you, hey, give me a report on all the money, on all the open invoices that you have recorded already, okay? So how do we do that? So this is just an overview. This is where you can enter in your transactions, not written in a report form. So how do we do that? Well, we can go right here up to reports. Okay. In this case, we're going to be looking at customer/receivables. Okay. And what we're going to be looking at is going to be customer balance information, or what we're going to be doing is looking at open invoices. So when we click on open invoices, this gives us a total of all of our invoices that are currently owed, in depth, in detail, of what each vendor has done for me. Okay? Or I'm sorry, each customer that owes me money. Okay? So this is what we've serviced them, this is what we provided, and this is how much they owe us in general. So each individual, right? So for example, Anderson Wedding, this is their whole entire account balance and what they owe me. Okay? So there you go. And Bob Mason is down below. All right. So there we go. That gives you a really nice overview of how many open invoices that we are expecting to be receiving payments for. Okay. So again, that is something that you can do as a person who's in charge of sales or just receivables in general. Okay. Now that we already talked about invoices, right? Let's go ahead and now finally talk about receiving payments. So there are 7 ways that you can receive a payment, right? We already talked about 6 of them, right? However way that you can enter in a sales receipt or an invoice is going to be the exact same 6 ways you're able to record or receive a payment, right? The one additional one is actually going to be on the invoice itself. At the top of the window, you can receive payments, okay? Well, obviously not on a blank invoice. If you were to go to the previous invoice that you selected, right, you'd be able to receive a payment that way. So that's 7 ways you can receive a payment. So what I'm going to do is I'm just going to go ahead and fast forward and just use the one on the home page. Now, each customer payment, when every time you click on that receive payment window, right, this is going to be based on the customer's profile. So for instance, right, the first check I'm going to be, or the first payment I'm going to receive is from Mr. Bob Mason. Now, if I type in Bob, right, there you go. I type in Bob, I pull up his information. It will pull me up every single invoice I've issued to Bob. Okay? Now, this is where a customer can choose, if they want to, they can choose to pay multiple invoices at one time. Just like how you can also pay multiple bills at one time, right? Customer can do that as well. So if they have multiple invoices from you, they can choose to pay them all off in one sitting, or they can choose to pay one off. Now, let's say, for instance, right, a customer decides to just give you a check, not really disclosing which invoice they're paying for. then that's where you're going to have to make that executive decision on your own. Where what happens when you receive a check and you don't know which invoice it's paying for, and all they do is just write the date on there and they don't write why they wrote this check out to you. If it's not explicit, then your job to do is you're going to apply that payment to the oldest invoice, okay? Because the newer charges, right, those ones have time to, they have a term, right? Those have time to develop over time. While your older invoices, right, maybe they're reaching their prime time, maybe they're reaching their due date a lot closer. So you always want to apply a payment. If you don't know which one they're paying, you want to pay it to the oldest invoice that's on your list. But in this case, right, we were given specific directions that this person paid a specific invoice, okay? Bob Mason gave us a total of $401.39. Okay? So that's what they did. So that's what you can do too, is you're always going to have to do this. Never click on the invoice without putting in the payment amount. Because in this case, right, if I were to do that, let's say I'm going to go ahead and find that one. So this $401.38, if I click on it, I'm going to get an error message saying this, that I didn't put in how much money I'm being paid. All right, so I'm going to click no. Okay, so let's go ahead and redo that again. So I have to put in $401.89 because that's what it told me I'm supposed that Bob is making a payment for, is the $401.48. Okay? Which, of course, by looking at the information on there, right, we can tell that this payment is meant for this invoice 3947. Okay? Okay, 39 cents, not 89 cents, sorry. Okay? So once you've done that, then what happens is this is going to be automatically checkmarked. So let's do that again. So if I typed in 401.39, and I type away from it, it's going to automatically say, oh, you must be paying this bill right here. So if you saw it, it automatically checkmarked it immediately. Okay? So even QuickBooks is also going to be quick to find which one's the oldest one, but also because in this case, this total amount that the check was written out for matched this entire invoice right here. So that's what it's looking for, is to match the number here. All right, and of course, now this makes it a lot more easier for us, right? Because we know Bob Mason sent us a check, so we must click on check. And when we do that, right underneath it will give us our check number. So in this case, much more easier than the sales receipt, right? We can actually identify where the check number belongs. Okay, so let's see. Receive payment from Bob Mason. Okay. Let's see. This is check number 5256, and the date on it is going to be on the 28th. So he paid on the 28th of January. Okay, and of course, because these are relative, I know that these dates are not as accurate, right? I'm supposed to put this in as it's 2021, but I'm doing as of today. Okay, so there you go. So once you've done that, then we can go ahead and proceed to checkout, because that's it. We're done, right? We received the payment. We can save and close, and it gets that beep of approval. So then look, now that I received the payment, let's follow that line of crossover. Now I have two things that are waiting for me in my deposits. Okay? Straightforward. It's very easy, very straightforward. So let me do another example, okay? What if I actually get a partial payment? Well, in this case, if someone, right, let's say, for example, Anderson Wedding, right? We just put one in for the Sarah and Wilson, right? Right here, they owe me a total of this much amount. Okay, I forgot. So let's say they owe me a total of $2,350. what if they can only pay me $1,000 right now? Okay, let's just say if I choose that they can only pay $1,000, what you're going to notice is now down below, it fills in all this information for me. Let's say they paid with cancel. They paid with a check. Okay, let's say they paid with check number 4001. I don't know, random number. Okay. Now let's notice this, right? Underneath this, now it tells me that, hey, they're only paying $1,000. This billing information or this invoice tells me that the amount that they owe me is $2,300. That means I'm receiving a underpayment. Now, this is what you have to do. Once you come over across down here, it tells you that this is a underpayment. What do you want to do with this underpayment? You have two options. You can either leave this as a underpayment, or you can choose to write off this as bad debt. Okay? Now, we'll talk about bad debt tomorrow in chapter 3. What happens when a customer can't afford to pay for what they owe, right? Because that's one of the risks of doing business, is allowing customers to owe on an account. And if, one day they lose their job or something's going on and they have a financial crisis or some kind of situation that tells us that they cannot make a payment to us, then what do we do with that money, right? It's going to be considered bad debt. Now, the options is we can either leave it as an underpayment and hope that maybe Anderson Wedding will pay the other half the next time, or we can choose to write it off as bad debt. Now, usually you always want to assume this, okay? Assume your customer is having a hard time making their payments, or you can assume that maybe they're making a double payment. Maybe they're paying right now what they can pay, and that the hopes is that they're going to end up paying the rest the next time, okay? That's your assumption, right? It's only when you've dealt with this customer for months and months and months, and it's finally coming to the point where you're charging them late fee after late fee after late fee, and you keep contacting them, and they're no longer picking up their phone because they don't want to talk to you, right? Once you come to that conclusion, that's when we can go ahead and safely say we can write this off as bad debt. But for now, we're just going to assume this person, maybe they'll make the second half payment next time. So what happens if I go ahead and proceed with this, right? Let's say they did pay us. They paid us for just $1,000. So what I can do here is I can save and close and leave it as an underpayment, okay? If I go ahead and save and close, right? Let's go ahead and take a look at that bill one more time. So if I go ahead and go to that Anderson Wedding, Sarah and Michael, right? Sarah and Michael. And here's their invoice, right? Let me double click and show you what happened here. Since they paid me $1,000, let's look what the invoice appears. It shows me that, yes, we did receive $1,000 payment. So that means Sarah and Michael, or Anderson Wedding, whichever group that you're referring to, they still owe me $1,350. And that's the cool thing about QuickBooks, is it keeps track of it for you. You don't have to keep track of it yourself. All you have to do is just simply do one thing. Record whatever the transaction is at hand. The QuickBooks will do all the work, all the accounting, all the updating information for you automatically. All you have to do is, okay, I understand now. Sarah and Michael, they paid me $1,000 on the 28th. That means they still owe me $1,350. All right? And that's what it means to record as an underpayment. You didn't write them off as bad debt just yet. Okay? It means that you're still allowing them to have the potential to still continue paying for what they owe. All right? So that's what happens when you receive an underpayment. An underpayment is a lot better than receiving nothing from a customer, okay? You should take every penny that they give you, okay? Because there could be an occasion where that customer will choose not to pay you, okay? And there are customers that are like that, okay? So now that I received that one, I have now 3 things in my deposit, okay? So let's go through the last example for receiving payments, right? What if I received a payment via credit card from Miss Maria Cruz branch opening? So when I typed in Maria Cruz branch opening, this is what populates. And let's say she paid off with a credit card for a grand total amount of, let's see, so they paid on the 29 for a grand total of $19.50. Okay? Now notice this, $19.50 means they're going to end up paying all 3 bills that they owe me, or invoices, right? And they're going to make a payment on the 29th of January. So in this case, what am I going to select? I'm not going to select cash because it's not a cash transaction. It's not a check transaction. It is a credit card transaction. So I need to select that. Now in this case, on Maria's profile, I have never saved her credit card information on there. So in this case, she is going to be using her American Express credit card. Okay, what's her credit card number? It's going to be 1234 1234 1234 1234. Expiration date is going to be October 20. I'm going to change the date here to 2022 because so she still has a year to do it. And again, for any reasons that you have to have that authorization, you can ask for the security code number on the back of the credit card. Okay? But for instances, you can never save it, so make sure you do realize that. Okay? Once you've done that, I can say done. And that means it's going to go ahead and process that credit card payment and go directly to your bank account. So this is something that you don't do on, this is not something that you're going to be knowing until you check your banking statement, okay? So if you are the kind that checks their bank account every single day, then you're going to see that this transaction has gone through your banking, okay? This doesn't go through QuickBooks or it doesn't go through you. It goes to your bank automatically, okay? So it's your job to make sure that you do have your checking account on at all times with you, whether you use QuickBooks to do it. So we'll talk about that in chapter 5 when we talk about bank feeds. You can attach your checking account on this QuickBooks. The only thing that you have to be very careful is, once again, you're adding sensible data to QuickBooks and you're allowing that QuickBooks has access to your checking account. Okay? So when you get that notification, then that's where you can go ahead and say, okay, Miss Maria Cruz paid me for 3 invoices. So this clears it off on the QuickBooks end, not the bank's end. The bank does whatever it does, okay? This is how you can keep track of your transactions, okay? So once that looked good, I'm going to go ahead and save and close. So now I have a total of 4 payments pending in my record payments. So let's go ahead and now check it out. So first thing I'm going to do is I'm going to click on record deposits, okay? Let me cancel this out real quick and show you what are the other ways that you can get there. There's only one here on the home page, and of course, you also have it on your banking menu too, okay? You'll be able to make your deposits there, okay? Only 2 ways. There's no more, no less, okay? So there's only 2 ways that you can do that, by going through the home page or the banking menu, make your deposits. So in this case, I'm already on my home page. I'm going to click on record deposits. Now I'm going to get 2 windows that pop up, right? One is the record deposits. This is your what kind of payments that you've received so far, okay? And you can filter them based on what kind of payment type it is. Is it a cash payment? Is it a credit card payment, right? And if it's a credit card payment, what specific credit card did they use, right? Was it a MasterCard? Was it a Visa? Okay? Why is this so important to know? Okay? As a person or a merchandiser, right? Let's explain it this way. As a merchandiser, okay, if you are willing to accept customers to pay you via some kind of credit card, whether it's MasterCard, Visa, American Express, Discover, whichever kind of credit card company that there is out there, right? You have to also assume that this means they are going to be taking care of the payment plan. The customer is responsible to pay the credit card off. So what does this mean is the credit card company is paying for the customer in advance for services and things that they purchase. And because they're basically fronting the money for that customer, us as a merchandiser has to also assume this. Because they're getting the money for us, that means we have to pay a slight courtesy convenience charge to these credit card companies because they're the ones that's paying us and getting the money for us in advance so we can continue doing business, right? And that they are assuming the debt that they're going to be collecting from the customer. That means the customer is going to be responsible to pay off their credit cards, and that they use those credit cards to pay us in advance. So that's why we have a credit card service charge, or we have what's called, depending on what your criteria is or whether what agreement terms you have, every credit card is different. So again, if you have if it's based on a percentage of sales, that's one of the agreements, right? So it could be anywhere from 1% all the way up to anywhere close to 6 to 7 or even 10% of sales, depending on which credit card usually does. Now, your more popular ones are probably going to take as at most maybe 2 or 3% at most for Visa and MasterCard. Okay? Now, that's a percentage of your sales. Now, let's say you are a small kind of business that doesn't have that many sales, right? Your price point doesn't go above $500 per sale. Then instead of doing a percentage, what they can do is they can do a flat convenience charge. Okay? So for example, right? Water store down the street here, right? Just to if you can't afford to pay enough and you want to use your credit card, right, instead of paying cash, they'll charge you a 25-cent fee, or they charge you a $1 fee on top of whatever it is that your purchases is, right? Okay? But unless you can pay above that amount, right? So if it's say their threshold is, it has to be $10 or more, or else you're going to get charged that $1 convenience credit card charge. That is that service charge right here. Okay? That's what they're charging you for. Okay? And that's a great example of looking at one where it's a percentage base or one that's a flat rate base. Okay? It just depends on what kind of business you are, what kind of customers you get, and what is the account balances that you normally would sell your product at. So again, most cases, a lot of companies who can afford it, they most likely would use a credit card company just because right now, that's like what majority of the Americans use nowadays, right? Credit cards is so convenient. It's so easy to use. Not everybody carries a wallet when they go around to the stores, right? They'd rather carry a piece of plastic around than carry, a bunch of ones in their hands or a bunch of loose change, right? That's society nowadays. So that's why it's important that we separate this, because we have to finance a charge that we're going to be subject to have to pay for accepting a credit card. Okay? So things that you can filter in, once again, you can filter in. So the first thing that we want to do is filter in your checks and your cash. Now, this is only necessary if you are receiving thousands and thousands of payments every day, okay? That's what this filter is used for. But for instance, right, I only have what, 4 charges or 4 payments here? right? 3 of them are checks and 1 of them is a credit card payment. So in this case, I can just, be able to select which ones are going to be, my checks, because it tells me right here, check, 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 and then American Express, right? It tells me right there, I can just select which ones I'm going to be needing to deposit first, okay? Because that's the rule of thumb. You're going to do your cash and your check first, because that's going to go in automatically at full amount that you were written out for. Only the American Express is going to be subject to a certain percentage due to the merchant's fee, okay? So in this case, I can do that, right? Because I only have 4 payments. So in this case, it's easy for me to filter it out. But if you have thousands of payments, then your best option is just to ensure that you only are going to accept only cash and check, that you do select the following, okay? That I'm only going to be receiving my cash and my check first. So I go ahead and click OK. So now that's the first thing it's going to do, is it's going to deposit all 3 checks, okay? You also want to make sure that it's going into your checking account, straightforward, right? That you're making a deposit to your checking account, right? If you want to make a deposit to your savings, you may do so as well, right? You have the means to do that. But most cases, when you're doing a merchant kind of, and you're accepting payments from customers, it's going to go straight to your checking account. And of course, you want to make sure that it is usually, however frequent you make your deposits in. Usually it can be done at the end of the week, usually at the end of the month. But most cases, if you are that kind of business that is a small business, your best bet is you should be depositing checks every day. All right? Just so then you have enough money to make sure that you have to be able to pay for other expenses that occur, okay? So there you go. I put in the ending date here. It's a deposit, and I'm going to deposit these 3 things. I'm also going to deposit one last thing. And what is that going to be? It's going to be an investment, okay? So for any reasons that you choose to do so, you can invest money into your company at any given time. So right here I have, okay, so I don't have that account. Let's see. For any reason that I want to be able to deposit this, let's see. I want to deposit, I want to add owners. Okay, there you go. Owner's contribution is what it's called. Okay, there you go. Owner's contribution. I am able to also accept other checks that I want to write in here. So if I have this right here, and I'm going to go ahead and say owners investment, because we're investing more money into the company, right? What kind of check was it? Or what was it? It was a form of a check, and we inserted this. This was check number, let's see, check number 13451, and it's a check, okay? And we're going to deposit for the amount of $15,000, okay? Now, in this case, this check is probably going to go for the entire company, so you don't have to designate who or where this check came from. But in this case, I'm going to deposit another $15,000, okay? Once everything that looks good like that looks good, we can go ahead and say, all right, that's it, right? Now, down below here is where, if you do have a petty cash fund, this is where you can withdraw money for that instance, okay? So this is only strictly for petty cash funds, cash registers, any reasons that you need cash back to dump it into an account. That's where you're going to be utilizing this for. So, for example, if I need to have money in my petty cash, right? I need to dump money in my petty cash. I would have to pick my account and tell me how much money I'm going to have cash back for. So in this case, we're assuming that our business doesn't have a petty cash. So this is the whole section for the petty cash section right here. Or if you just want to have cash on hand, make sure you have an account called cash on hand. So you can either have it to, for any reason that you need cash on hand. Okay? So I'm going to go ahead and click on deposit. So let's go ahead and take a look. So if I go to my checking account, right? It's going to tell me this, that on January 31st, you received a deposit, right? Not a bill payment, not a check. You deposited the money, and it's split because, again, it's a bunch of money that came from your sales, but also came from your own investment, right? And it tells me that I just deposited $16,870. So therefore, now I have a grand total of $28,000 in my checking account, okay? So again, when you do have that cash or you do have those checks lying around, right? Hold off till the end. Once you make your deposit, right? You can go ahead and clear it on your QuickBooks. So you have to make your deposit first. You can't just make your deposit and assume that the money is going to magically appear in your checking account. Unless you're using online mobile banking, right? Where you're taking the picture of the check and it's going to deposit it. Then yes, you can go ahead and do that. All right? So that's that there. Okay? And, okay. So now that we cleared out our checks and our cash, right? Let's go ahead and record that last deposit for that credit card. Okay? So I go ahead and click on this, right? Because that's the only payment I have left. And I'm going to go ahead and click OK. So now what happens is now it's showing that I have a payment from Miss Maria Cruz, who paid me a total of $19.50, right? But that's not true. When I pull up my bank statement, right, it's gonna automatically calculate the merchant service fee that I charged charged on my account, because I'm the one who allowed my customers to pay using a Visa credit card or some kind of credit card, okay? So that means I have to incur some bank fees. So in this case, that means one thing I'm going to be putting in here is going to be bank service charges, okay? Because that is what I am subject to have to pay for, once again, having credit card payments being accepted, okay? So what I'm going to do here is I need to calculate. Now, your book tells me that it is this credit card payment, right, is subject to a 2% merchant fee. Okay, that means they're going to charge me 2% of my sales. So therefore, I need to calculate this. How can I calculate this right here, right? I can go ahead and use my calculator on my phone or use a calculator on QuickBooks, however you like it. But the great thing about QuickBooks is you're able to do the calculation right here in the cell. Okay? What? I can? How? Well, so in this case, right, out of all my credit card payments, I only have this one amount for $19.50. So that means that's my starting point. But let's say if I had a whole bunch of credit cards, right, I would go down below to see my total, and then I'd be able to plug in my bank service charges here. So in this case, I have $19.50, right? I need to figure out what 2% of $19.50 is. So what I can do here is I can actually type it in right away, $19.50, and use my symbols on my keyboard and say I want to multiply this by 0.02. And this is where the exception that you can use enter, because it won't save the transaction. It will just enter in the calculation. Now notice this, it pops up a little sales receipt, right? Very, very nice and cute, right? But it gives you a little way to see your calculations right here, okay? So I go ahead and press enter, and notice this. My charge is going to be for $39 even. Now, wait, hold up. Let's take a look at this. Am I depositing a whole the account for 1989. That's not right. That's not how much I'm supposed to be depositing, right? I'm supposed to be depositing less than 1950 because I got charged. So in this case, you need to know that when you're calculating how much the service charge is going to be, it's going to be based on a negative number. So in this case, I have to go negative 0.2%, right? So 2% of my 1950 is going to give me now negative $39, okay? And of course, you're going to assign this to Walnut Creek because that's what your book tells you, right? That this payment's from Walnut Creek. So in this case, there you go. You're going to get subtracted $39. So that means at the end of the day, you're actually really depositing $19.11, okay? Because you had to pay for that 2% service charge for allowing your customer to use American Express to pay for their bills. Okay? Any questions there? We call this quick math. Okay? Just like quick add, right? Except this time we're doing math in the cell right here. So therefore we call this quick math. When you get that little tape picture. Okay? And I can go ahead and save and close. All right, and that's how you record your deposits. Okay? Any questions there? No? No questions. Okay. So next section here is, well, I skipped this one section here, so let me go ahead and go back to it, is what happens when you have a customer and you gave them some terms. How do you record the discount there? Okay? Well, let's go ahead and take a look at that. If I go ahead and click on customer payments once again, and let's say Mr. Bob Mason decide to pay for his one of his invoices, right? So right now he has 2 that he still currently owes. But this time he ends up sending us a check for a total of $151.45. Now, hold up, let's take a look at that because none of our total amounts actually match up to that, okay? And he paid on January 31st using check number 5912, okay? So now that we take a look at this, right, why is he sending me a check for $151.45? Well, let's take a look at his bill, okay? How do I look at his bill? Well, you can double click on, so for example, right, it's saying maybe it's for this one. No, it's not for that one. It's actually for this one. Well, let's go ahead and double click on that bill. In this case, right, Bob Mason is paying me $151.45 when he owes me a grand total of $154.54. Why is that? Well, let's take a look at this very carefully. We gave Bob Mason an opportunity to take advantage of a discount if he paid within 10 days. If not, the whole entire bill is due in 30. In this case, right, when did we issue this bill? We issued this bill on the 27th of January, and now it's fast forward to the 31st. So he definitely made a payment before within the terms, which is the discount due date, which is within 10 days. So therefore, he calculated that 2% automatically and sent us a check for less than what it's supposed to be. So how do we apply this discount? Well, in this case right now, it's showing that he's making an underpayment. But what you have to do is at the very top of this window, there's only one place that you're able to apply the discount. Is you're going to go up to the top of the window And then you're going to go ahead and click on discounts and credits. So if I were to click on discounts and credits, now it's going to appear that's saying, oh, right, for this invoice, there is a 2% discount on there. And it's calculated for you $3.09. Okay? What amount of discount is it? $3.09. Discount account. This is a sales discount, right? Okay? What class? He belongs to San Jose. That means you're giving him a discount because he's from San Jose. Okay? Once everything looks good here and you apply this discount, you're going to click done. And then now look at your bill now. Now it doesn't show that you have an underpayment. It shows that you have this bill, right, for the $154.54. You have the discount for $3.09. So therefore, this bill or this invoice tells me that it is now $151.45, which is the exact amount that he sent me a check for. Okay? And again, he's using a check. Okay? So there you go. That's how you apply discounts. It will not tell you automatically that there is a discount available. You have to be able to keep track of your own invoices and keep track of your own potential customers. Because again, if they sent you a check for under the payment amount, you need to check through the profile. Why did they send you less than what it is, right? Because he took advantage of the discount. So he already calculated it and is paying you less for what he owes. Right? And you can save and close. So that is dealing with a discount that you gave to your customer. Okay? Now, for any reason that, let's say you want to, I'm going to go ahead and click cancel. I'll save. Okay. For any reason that you are wanting to do this ahead of time, you can print a deposit slip, okay? Because if this is the money that you're going to be making a deposit for at the end of the day, right, to save you some extra time at the bank instead of having them fill it out, or you're going to fill out your deposit slip anyway, right? You can save yourself some time by printing out deposit slips. Okay? Basically giving you all the account information on there, but you have to link your checking account to QuickBooks for it to produce this information for you. If you don't have that, then you're better off just going to the bank and filling the deposit slip there. Okay? So you can print out your deposit slips if you would want to. Okay? But in this case, I'm not, and I'm just going to go ahead and proceed and say I received that payment. Okay? So now that we talked about that, let's talk about another important aspect. Okay, let's see. We have recording our deposits. Okay, we got our checks, we got our credit cards, and then printing our deposits. So that is it for today. Okay, last section that I was mentioning earlier was to basically go over the different reports. So, okay, as I've mentioned this last week, right? It really depends on what your position that you have in the company, because a lot of these reports are not going to make any sense to you if it has nothing to do with your position. Okay? So again, for instance, if you are the sales representative, right? Or if you're in charge of sales, what reports would be crucial to you? Which kind of reports would you want to run? So if I click on reports, okay, I click on customers. Well, in this case, this is a sales. So I can take a look at what are my sales by customers. I can do what's my sales based on the items I sell. So in this case, if I go ahead and click on sales by summary, by item, okay, I can choose maybe this time I could choose all of them. So here is a record of all the things that I sell, all the items that I have available to sell here. So I have my services, I have my actual products that I sell, and this is the amount that each person or how much I've averaged out on my total sales. Okay, I can see which packages or which ones are doing way better than, which ones are selling more, and so on and so forth. Okay, I can even do a sales by rep, so I can even check up, oh, who is uh having the most sales. So in this case, right, you can see here based on each individual person. So in this case, Mike Mizuki and Katie Reynolds are the two people that are having are my sales representatives. Here, you can see Mike is not doing as well as Katie, right? Katie seems to be doing a lot of sales, right? So that's how you can compare your sales representative, and maybe this is where you can say, hey, Miss Katie over here, she had the most sales, so I'm going to reward her with a bonus. Okay? This is information that you can use to apply for any question that you have about the company. So once again, what are my sales by items? Which store is doing better in sales? Okay, so in that kind of case, that's going to be more for profits using class. Okay, yeah, yeah. So again, you can have all those information here. You can even produce graphs, okay, which I'm going to show you in chapter 6. Okay, then you can also, this also stems around to your accounts receivable as well, but we'll talk more into accounts receivable reports more so in chapter 3. Okay, so those are the reports that you can do in chapter 2 when you're dealing with sales. Okay, and that is it for chapter 2. Any questions in regards to chapter 2? No questions? Yes.
Just a curiosity, how is the gift card and voucher treated? So I'm giving a gift card and I go to a store and I buy stuff with my gift card.
Mm-hmm.
Would it be considered a cash sale?
So in this case, right, we'll actually talk about this in chapter 13. What happens when you use things like that? Exactly what you said, right? Or what if you had to do a down payment, like a
Okay.
deposit, right? We'll talk
Yeah.
about that in chapter 13.
Okay.
Mm-hmm. So yes, there is a section on customer deposits, customer payments, and you would treat that gift card as a means of, as if that portion is paying towards the invoice. So we will treat that as a customer deposit. Okay.
Thank you.
Mm-hmm. Any other questions in chapter 2? If not, let's go ahead and go through the multiple choice section here for chapter 2. All right. So, again, your job is to select the best answers from the following. Okay. Number one. Okay. In a new customer window, okay, you'll find everything except. So here's this word right here, except.
D.
D, year-to-date sales information, right? You only see that once you finish creating your company file, or you create your customer file, right? That's where you could be able to view it, obviously, by every time you enter in your invoice and all that stuff, right? That's where you'll get the year-to-date information. But you'll never see that when you enter in a customer for the first time, okay? You'll definitely see the customer name. You'll definitely see the customer invoice bill to and shipping address, okay? And of course, you're going to also see customer activity or an active and inactive. status. Okay, so when you have a customer who's doesn't really is active with you anymore, you can choose to inactivate that, right? And we talked about that same thing in chapter 4 as well as chapter 12. Okay, good. All right. Number 2, okay, you should record a sales receipt when the customer pays. A is correct, right? By cash, check, or credit card at time of sale. That's the most important thing is right here. At time of sale. Excellent. Number 3, okay, which statement is false?
B.
Let's take a look at B. B says invoices decrease accounts receivable. Okay, if you guys know a little bit of accounting background here, right? Every time when we issue an invoice, right? When we create, basically when customers owe us money, right? We create that amount, right? We call that accounts receivable. Okay, it's money that customers owe me. So in this case, right, which statement is true? Or in this, which statement is false? Invoices never decrease accounts receivable, right? How would you decrease an account receivable when customers owe me money? How do you decrease that? You would decrease that by when a customer pays you, right? So every time you have an invoice, that's going to increase the amount that they owe you. So therefore, you're increasing the accounts receivable account. Okay. Number 4. Okay.
D.
All right. Okay. All right. Let's ask the question first real quick. Okay. You may specify payment terms on the new customer window. Okay. However, you said D, okay, is correct. You are also permitted to override the terms on each sale. So again, yes, I did not show you that, but that is something you can definitely do. So for instance, right, when I'm billing a customer or invoicing them, excuse me, when I'm invoicing a customer, how can I make changes? So for example, so let's take a look at my last invoice. So this person, right? This person was the Anderson wedding, Sarah and Michael, right? If I wanted to, let's say because I gave him a discount, and I'm going to say, you know what? I'll give you an extra opportunity to take another advantage of a discount. I can just go to terms and be able to say, I'm going to give them a 2% discount if they pay me within 10 days, right? And I'd be able to process that, and it's going to say, oh, you made changes to this. Are you sure? I say yes. Now it says, but you made changes to this person's profile. Do you want to save it? That's where you say no, because you don't want the next time you issue out another invoice from Anderson Wedding that it's going to override it and say you're going to give them another 2% discount. No, that's only if I choose that time saying I want to give them a discount today and only today, then I can choose to change my terms permittedly on the actual sales form itself. I can choose to give them terms whenever I want to. Okay? Even though I've already designated it in the customer's profile. Okay? Number 5, right? Your company has just accepted a payment for an invoice, okay? What should you do in QuickBooks to record this payment?
D.
All right, number 5 is D, okay? You're going to click the Receive Payments window by clicking on the Receive Payments icon on the homepage, right? Straightforward, right? Straightforward. Just follow that transaction line. If you have an invoice and you're trying to receive a payment, what are you going to do? You're going to receive payments. Straightforward, okay? Number 6, which statement is false? So another false statement.
B.
Let's take a look at C, okay? The PO number is required on all invoices. Great. That is definitely not true, right? Because again, if you have it, then you have it. If you don't have it, don't worry about it. Okay? You're not necessarily to have a purchase order number, okay? Only if a potential client has done their research and did a sales order, that's where you can have a purchase number there. Okay? But again, if you don't have that system where you don't have customers calling in to get quotes from you, then you don't need to worry about it at all. Okay? So good. Letter C is correct. It's the statement that is false. Okay? Number 7. Okay, to record a deposit in QuickBooks.
D.
D is correct. All of the above. So A, you're going to make a separate deposit that includes both checks in cash. Okay? You're going to make a separate deposit that includes both Visa and MasterCard receipts. And then, of course, C, you're going to make sure that each deposit total matches the bank feed on the bank statement. So again, letter C is something that you should just already have read through. Like, how do you make sure that the deposit went through? Well, you're going to get a deposit slip, aren't you, from the bank, right? That's where you're going to match it up for that. Or you could just check your online mobile banking, check your statement that way, and you can see if you deposited the correct amount in the bank. All right. Number 8. Your company has just received an order from a customer who will pay within 30 days. Okay? How should you record this transaction?
A.
A is correct. You are going to be creating and issuing them an invoice, okay? By clicking on Create Invoices button on the homepage. Straightforward, right? Okay. Number 9, okay? When you make a deposit, all of the following are true except. So we're finding the false one here. Number 9, you said A. You are correct, okay? You must print out a deposit slip in order to process a deposit. Of course. That's not true, right? You can go get the deposit slip from the bank. You're not obligated to print anything out unless you want to save yourself 5 minutes from writing everything out at the bank, right? While making your deposit. This only makes it easier for you. It is not a requirement. Right? Excellent. Number 10, okay? Which statement is true in regards to calculating items?
B.
For number 10, let's take a look at that. A calculating item always calculates the amount of all of the lines above it. Here's the key word, all. Is that true?
No, I suppose it's only true when you have the subtotal line.
It's only true if you have the subtotal line. So B is definitely not the answer because of that one word, all. Okay? So which one is true?
D as in dog.
D as in dog is correct. A calculating item uses the amount of the preceding line to calculate its amount. So this one is true because we just talked about it, right? B is only true if you have the subtotal line. Okay? But in this case, it didn't even mention a subtotal line. So what does a calculating item actually do? It only calculates the preceding line above it. Okay? So letter D is correct. Number 11. When creating a customer record, okay, which statement is false?
B.
Let's see. 11, correct. C is correct, okay? A sales rep must be selected when creating a new customer, okay? Now, which statement is false? So obviously, you don't have to assign a sales representative if you don't choose to have a sales representative, right? Again, that's only extra information. That's why it's under the additional tabs info, is that if you choose to have your sales representative take advantage of, maybe commissions based on the sales, or maybe you give them a bonus at the end of the year saying, if you, whoever has the highest amount of sales for that year, I'll give you a bonus. So if that was it, then yes, you should be keeping track of your customers based on who is helping them or who's a sales representative if you do those kind of things. So in this case, that's not true. You don't need to assign it to every time you create a customer profile. It's only if you choose to have a sales representative. Okay. Number 12, okay, when receiving payments from customers, okay, to whom you have set invoices, okay, you must,
C.
all right, number 12 is C, all right, you're going to be entering in the payments into the receive payments window, and then check off the appropriate invoices that to which the payment applies to. Correct. Okay. Number 13. All right. You need to calculate the amount of bank card fees, by multiplying the amount of the received payments by -1%. What useful QuickBooks feature could you use? So what do you call that? What was that? B as in quick math. Yes, you can use the feature that you can enter it in right away into the cell itself and basically ask it to do quick math for you. So you don't have to do calculations that much. All you have to do is just typing in. Okay, so that's the QuickBooks feature that you can use to calculate things for you in any kind of sale form or receipt or something like a deposit. All right, number 14. The undeposited funds account tracks what?
B.
Number 14 is B. All right, it does keep tracks of funds that you have been received but not yet deposited, right? Hence the word undeposited, right? Straightforward. Last question of the day, number 15. After entering in an existing customer in the customer/jobs field of an invoice, and let's say a customer/job is not found, okay? That dialog box appears to say that the customer does not exist on the customer's list. What should you do? Okay?
A.
All right, let's take a look. Let's read this carefully. You have an existing customer.
No.
C. You are going to click cancel and then check the name that you entered in the customer/jobs window, because in this case, you have an existing customer. But for some reason, when you typed it in, you get that dialog box saying that this customer has not been found or this customer does not exist. What do? You probably made a typo somehow, or maybe you referred to their nickname versus their real name, right? Mistakes happen. It's a common, easy mistake that can be overlooked. So in this case, just, blank it out and type it in again and see if it populates up there. Then worst case scenario, if you absolutely cannot see them or find them on the list, that's where you go ahead and quick add them. Okay? All right. So that is it for chapter 2.